The gold price has handed back some of the gains made in previous sessions today, but tentative signs that the Eurozone economies are turning a corner has provided some cheer for the market. Spot gold was last around $11.50 per ounce after more positive data out of the US drove the prices down this afternoon. However, surprisingly, the light at the end of the tunnel could come out of the Eurozone. Data out of the bloc economy today has finally shown some evidence of growth. French third quarter GDP rose to 0.3%, while the German number came in as expected at 0.1%, with the overall EU number at 0.2%. This could alter the perception that the European Central Bank was readying a fully fledged quantitative easing programme next month to prop up the ailing Eurozone economy. A move away from QE, however, would signal that the euro is improving and thus could shave some of the strength from the dollar and ultimately improve gold prices in the long term, though we may be looking at Q4 results before we see any real evidence there in prices. Signs of the renewed growth also backs up the ECB's decision to await the results from its LTRO and ABS programme before considering a full QE programme. In other data today, more disappointing data out of China will put pressure on the Chinese government to introduce further stimulus measures as the country looks to meet its 7.5% GDP growth target for the year. This morning, however, Chinese new loans and M2 money supply data both disappointed. In other news this week, physical demand out of China is still looking bleak, with premiums fairly unchanged at the moment on the Shanghai Gold Exchange around level par. Many see this as important for the revival of the gold price in coming weeks, although take-up has been weak during the adverse period for gold. One of the reasons, we're told, is a continued clampdown on commodity imports for the purposes of financing, which has choked off local demand for imports. Another reason could be with consumer buying. Data from the World Gold Council this week revealed a 39% in Chinese jewellery demand in the 3 months ending in September year on year. So, with gold prices, there's a resistance forming at the previous downside breakout point around $11.80 per ounce, so that level will be eyed over the next week, with downside support at the November low of around $11.30. Any break there could see freefall selling towards the $1,100 per ounce mark. In the other metals, silver remains interesting. It's holding that mid-$15 range as it has done for most of the week. Any spikes in the dollar, however, will see it testing that level once again. Platinum currently down around $15 so far today, around $11.80 per ounce, while palladium at around $7.50 per ounce is also down for the day. This is Ian Walker reporting for the Bullion Desk, down here at the London Metal Exchange.